Alrighty, folks, earnings season has started. And like all quarters, we start with the financials, the big boys. We got JP Morgan, Wells Fargo, and Citigroup. Just happened on Friday. We've got Goldman Sachs, Morgan Stanley, and others on Monday. And then we just roll into retail, restaurants, technology. But let's take a look at what happened in financials with the one and only Mr. Dan Bird. How you doing, sir?
I'm doing well. How are you? Tax day tomorrow.
Tax day. I just dropped off my six figures and yeah, that wasn't fun. But hey, that just means I made a lot of money, I guess.
Yes. Why complain about that? But we need
I
to
want to complain.
we need to make you pay your fair share.
Oh,
So
believe me, I paid my fair share.
I don't think the politicians believe
Uh,
that.
I don't know many politicians that wrote a six-figure check, so we'll see. But anyways, enough about me. What happened with banks?
Yeah, let me share my screen and talk about that. I want to show you something else too. That's kind of cool. Um, if anyone wants my newsletter, which I put out every weekend, just go to breakpointtrading.net and click on this button here for the newsletter. Um, before I jump into it, I want to show you something.
Oh, look at you! You
Look
hung
at
your
that.
belt. That is awesome. You
How
deserve
about
that, man.
that?
That's pretty cool.
It's right in my office,
I love
along with
that. You
along with some of my other trophies.
Oh, dude, yeah, folks, we don't know what you're looking at. That belt on the top of the screen there is something Dan was given as a thank you gift for coming out to the Vegas event. All the speakers got one. It has his picture, and yeah, I love that. It's a great display.
Yeah, it's a great event. Are you going to do it again next year?
Yeah, President's Day weekend. I've already paid the deposit.
Yeah, I mean, a lot of people that were there were hoping you would continue to do it. I mean, I heard a lot of chatter about that. I think you might need a bigger venue actually.
We're gonna try to do 400 people. We're gonna max out that
It
venue
was
next
a it
year.
was a fantastic event. So much knowledge that you brought together in that room
Yeah, it was
on
fun.
all kinds of topics, everything. So it
Yeah,
was
it
good.
was
Great,
really
great networking, great networking event too.
yeah, great networking event. I did that on purpose. We had stocks, we had small business, we had real estate, we had mindset, we had um it it was a lot of fun. Folks, if you want to get the event, it's on my site. You can get it, the recording, plus 21 podcasts that were created also. It's and the PowerPoints. Dan, you had a PowerPoint, so your PowerPoint's available, folks, if they want to get the
Yeah,
event. But yeah, I'm gonna do it again. We
good.
commit to
That's
doing
good.
them 1 year at a time. It was so much fun I had to do next year.
Oh yeah, you definitely should. I'm glad you are going to do it. It was very much worth the cost to go, even for
Yeah,
travel.
you had to pay, right? You didn't have to
Yeah,
buy a ticket, but you flew
no,
out, you had a hotel.
yeah,
I
yeah.
didn't I
Flew
didn't
out
pay
and
anybody.
stayed at a resort, and yeah, we stayed a few days actually there. My niece is a follower of you. She actually paid and went to the event as well.
Wow, that's
She
great.
she stayed with us while we were there, so it was good. It was a fun weekend.
Yep. I look forward to doing it again.
Okay, so let's talk about financials. So I'm going to start this by looking at on my website. I have here all of the sectors, and every day I update each of the industry groups inside the sectors with whether they're moving up or down for that day.
Mhm. Yep.
You can see on Friday there was only one green button.
Mm.
Computer
Wow,
hardware.
computer hardware. Okay.
Yeah, Apple had a good day Friday.
Oh, okay. There you go.
Um, but let's first take a look at the sectors. So I want to look at the financial. We're going to concentrate on financials. So let's look at the financial sector. Actually, if you go here to sector tracker, which is actually on the site,
Mhm.
but it's a link to another site, so you can go to this even without going on my site. Sector tracker shows you the status of all the sectors, and then you can see which groups are inside each one of those. So that's what makes up. There's the holdings of each of those sectors.
Got it.
So this is one day, so you can see everything's red for one day. Materials not doing well, technology, energy. If you look at 5 days, that's for the whole week. Financials right here. Financials was the worst performer for the week.
Wow.
And then it'll show you which stocks, what the holdings are for the financial sector. So there's Visa, PayPal, etc. All right. So financials for the week did not do well. If we look at the financials right here, this gives you a weekly chart. You can see that's rolling over. Everything's going down. Here's the
Oh, wow. Look at that.
stocks above their 20-day moving average.
Zero? Is that what that says?
It is not zero. It is 1.39%.
Oh, wow. 1.39.
Less than 2% of the stocks are above their 20-day moving average. 34.
I would call that ugly. Would that be fair to be called that ugly?
Yeah, I'd say so. 35% are below their 50-day moving average. So the sector itself is not looking good. In fact, it not only is it rolling over, crossing its moving average lines, it's below its 50-day moving average now. It's accelerating.
Well, this is really, I mean, Jamie Dimon, I think we'll get into JP Morgan, but Jamie Dimon is singing a song about, hey guys, it's going to be risky out here. It's basically what Jamie Dimon is saying.
Yeah, I'm not sure I listen to Jamie Dimon anymore.
Oh, wow. Okay.
He said that a year and a half ago.
No, yeah, it's true. He's Thick and Little, maybe a little bit.
Yeah, he is. Okay. So inside of the financials, these are the industry groups and financials. You can see Friday, banks went down, financial administration, investment services. But if we look at banks, now you can clearly see this also is a weekly chart. So there's banks for the week. So banks, had a bad week.
Yeah, it had a bad week. Now, maybe you're going to get to this, but I'll ask it here. Is this all a recognition that the Fed's not going to cut 7 times or 4 times or now even 3 times? Is this just people finally recognizing higher for longer is real?
Yes.
Ah! Did I lead the witness? Oh, sorry.
And I am going to talk about that
awesome.
in a minute. But yes, I think that was the effect of this.
Yeah, and it's interesting. It's interesting you bring that up because you see it in banking, which is awesome here. Where I'm starting to see it is in commercial real estate. There's a bunch of operators I know that were hanging on by their fingernails that are seemingly giving up because they were hoping that rate cuts would bail them out.
Right.
So, I think capitulation might be near, maybe. I don't know.
Yeah, I don't disagree with that. I mean, I think everyone's talked about commercial being weak anyway.
Right.
So this is the sector, the real estate sector.
Okay.
And within the real estate sector, you have all of these industry groups. So residential, these mostly are REITs here.
Right.
I don't think there's a commercial, industrial, and office REITs right there. So they're below their 50-day moving average as well.
That would be recognition of higher for longer. That's what that is.
Yeah, and the thing about this is it's one thing to see the actual chart and what the price is doing. Again, remember this is a weekly chart, so that's for the whole week. It's below its 50-day moving average. It went up to its 200-day and couldn't get through it, got rejected.
Well, that time frame was December. That when that peak happened, we were talking 7 rate cuts.
Yes.
Now correct. We're talking 2.
Right. That's right. And all that rate cut talk. I mean, this is the October low right here. Of course. So everything went up here, but all of that rate cut talk started in that period. But the other thing that I look at is not just what does it look like right now, what's it doing, but what does the momentum look like? And the momentum is just beginning to accelerate.
Yeah.
It's not like, this looks like this and the momentum is way down here like it was right here.
It's just rolling over. Yeah.
It's just rolling over. And it's been relative to the S&P. So this is office and industrial REITs. Relative to the S&P has been underperforming since the beginning of 22 or middle of 22. So it's been underperforming for quite a while. All right. The other one up here that's been doing really well in the financial sector is insurance.
Of course, they've been raising their insurance premiums by 20 to 40%.
Yes, exactly. They have a monopoly. So
Yeah.
if we look at full line insurance, there's what it's been doing for most of the year. But look what happened last week.
Hmm.
And again, momentum
Okay.
just rolling over. If we
Interesting.
look at insurance brokers, same thing,
Wow.
rolling over. If we look at life insurance, big time.
Oh, look at that.
All right. So insurance was the kind of the safe haven over here. It was going up, regardless, it was kind of going up along with aggressive and
So
growth
let me,
stocks.
I may be reading way too much into this. So as always, correct me if I'm wrong. So I think we've already talked about banks and now really banks or financials recognizing higher for longer, commercial real estate higher for longer, rolling over. But could this be a bigger picture about the economy finally going recessionary, perhaps? Or do we need to wait for retail and restaurants to kind of have that discussion?
Well, we talked about that quite a bit over the last year.
Mm-hmm.
And I have maintained that we're not going to have an all at once recession like we've had the last three times.
All right. So a rolling recession, more
It's
like.
a rolling recession that's going to hit different
Okay.
parts of the economy at different times.
And I agree with that.
So,
We've talked about it. I think, yeah. So, okay. So we're
so
still there. We still think rolling recession.
yeah, so I think for financials, yes, we're in a recession for financials right.
And we
But I
weren't a
think
year ago. But yeah, I
and
got
we
it. I'm
weren't
with you.
right.
Okay.
In fact, retail, you might have said retail a year ago.
No, well, we would have certainly said real estate
And real estate, yeah,
in
exactly.
mortgage. Yeah.
Right. Now, I think this will continue, if we get a rate hike in June,
Oh,
right?
that could be again, so something I called for. I think we talked about this. If not, I'll catch you up. After the dot plot came out, I was severely disappointed, and I wore that swing and a miss shirt because I was hoping one or two Fed presidents would threaten going higher, and none of them did. I
Yeah.
don't know if you saw it. I think it was Sunday, might have been Monday. Michelle Bowman came out and said, we may have to go higher.
Yeah.
I'm hoping at least one more Fed president this week
Yeah.
says a
Well,
rate hike is not off the
yeah,
table.
this week is when all of them will be talking. So
Correct.
they might start saying that. Although, I'm not sure they want to scare the market that much.
They just need the threat, Dan. They don't
Yeah,
threaten.
I did, but they don't need to threaten to go higher. They just need
Yes,
to threaten that they will take whatever measures are necessary to make sure that inflation is under control. That's all. That's what they'll say.
no, dude. They need again. I don't think they need to go higher. Let me be very clear. They need what one more Fed president has to threaten. Again, it doesn't have to be all of them. Just think about it. If Michelle Bowman's one, we get a second. That's 10% talking
Yeah.
about going higher. They won't.
Right.
But I really do think the market just needs to. Because if we don't threaten the market, we'll probably get a rate hike, and I think that could be really bad.
Yeah. No, I don't disagree, and it probably will be the final straw that will break the economy.
That'll cause a recession.
And we talked about this last week too, where I said we could have a hike in June and then a cut in September.
Yeah, I remember that. Like that would be the Fed just completely losing control.
Yeah.
Raise, pause, cut. That would
Right.
be bad.
But if we get a CPI like I think we might in June, the Fed is going to start looking like they're behind the curve again.
Yeah, absolutely. That's a big fear. You're right.
So, we'll see what happens in May. I think the May one will be fairly tame, but that June one is going to be interesting. So anyway,
folks, you can go back to last week's conversation and get more about why May will be tame and June's the fearful one.
Yeah.
But yeah, just look up base effect for short.
Yeah, that's right. I presented the evidence last week.
Yeah, go watch.
By the way, just out of curiosity, I have these seasonality buttons on here. So just out of curiosity for financial seasonality, and we'll go back 20 years.
Okay.
So 20 years, we are right now in April. April normally is a pretty good month for financials in general. And then the next 2 months are not so great.
Okay.
So it falls off some. And then versus the S&P, financials versus the S&P, if we look over 20 years, May and June are the weakest months for financial. So we're just starting into this period.
Right. Okay.
It's normally historically weakest anyway.
Yep.
So that's just one way you can use these little buttons for any of
Awesome.
these sectors, to see how they've done over the last 20 years. So now let's take a look at the individual stocks.
Okay.
And one of the things I have on my site, and this is right on the homepage, it's actually up here, in the main section on the top, the header. So you can get to it from anywhere on the site. I've got my newsletter, of course. I've got the long-term bull market, but I also have click here for earnings.
Hmm.
So you can look at upcoming earnings and it shows it by date. So these are all the ones reporting on Monday. You can segment this by the S&P 100. So Goldman Sachs, Schwab reporting on Monday. Bank of America is on Tuesday. Bank of New York Mellon. So Morgan Stanley. So we've got some more financials coming next week. You can look at the NASDAQ 100. There's Netflix reporting next week. But you can also look at reported earnings. So these right here at the top are the ones that reported on Friday. And I have already, let me sort this by percent difference of what they beat by. Citigroup beat by 34%
Yeah.
on both top and bottom line. Wells Fargo beat by 13%. JP Morgan beat by 6%. They had some good earnings. It's not like earnings were bad.
So again, I talk about this on the daily financial news. They all beat very much lower expectations. Citigroup beat earnings, but if you do a year-on-year compare, earnings were down 24%. JP Morgan gave very weak guidance, talking about interest margin or whatever they call that, interest expense.
Right.
So I mean, this is what my audience needs to realize. We got to watch. What I would tell people to do in a market like this is watch revenue. Earnings can be manipulated quarter to quarter. Let's watch revenue. And these companies, all their revenues were down year on year.
So here's revenue for JP Morgan, 4.193. Last time down slightly.
That's not last time. That's the estimated revenue.
This one is revenue. 4.193 is revenue.
Right. 4.41.6 is the estimated revenue.
Yeah, that's the estimate. Correct. Yeah.
Yeah.
Right.
Yep.
And then Citigroup 21 and 20 was estimated. So yeah. And then the forward guidance, of course, is what's going to send the stocks lower.
Yeah, I mean, but Citigroup, I just read their earnings this morning, so I have it kind of top of mind. That revenue right there, 21.1 is a beat. It's down 23% from last year. This is how companies manage. It's kind of set the bar low and
yes, right. And I think that's what they're doing right now.
Of course,
I think they're using
they don't want to miss.
I think they're using this opportunity right now to lower the bar,
correct,
so that they won't miss next time. Now, if we look at the stocks themselves, here's Citigroup.
Oof.
So, had reasonable earnings, but guided lower, ended lower. We look at Wells Fargo. Actually, not too bad overall. So there's a closer in view right there.
Yeah.
It actually went down and then came back up midday. Okay. And then JP Morgan.
Right here. They're the creme de la creme. I think they had a pretty weak guidance.
And huge drop off.
Yep.
For them.
Ugly.
If we look at that one. That's a solid down candle right there. Below the 50-day.
Look at the volume. Whoosh.
Everything's a huge volume. Yeah, everything's falling. That is not a good look.
That's ugly.
Yeah. So, and then if you look down here, this one down here is how are they doing versus their peers,
right,
in their industry group. And JP Morgan had been outperforming, but not after Friday.
Not after Friday.
Here's Citigroup. right here. And they are still,
Oh, look at
Citigroup
that.
is still outperforming their peers. So
Yeah,
Citigroup's,
Citigroup's an interesting one because they're I guess I'll call her new CEO. She came in and I think she laid off like 12% or something. So
mhm.
they did a cost saving move, lowered overhead. And I think that's what you're seeing in the Citigroup numbers is
Yeah,
margins are getting better.
Citigroup of all of them actually looks like the best one. Wells Fargo actually didn't go down that much either.
Yeah, well, Wells Fargo's had its own challenges with their bank account scams and all of
Right.
that. They've been in the penalty box for a long time.
Yeah. So, in summary, I think the financials are going to struggle.
Hmm.
I think they're just
Yeah.
starting into that period right now. I think they may recover by the end of the year.
Mm.
We'll see. I think they're setting the bar low now,
Yeah.
and maybe even the next quarter too, to
Yeah. Well,
have.
I think higher for longer hurts them. They don't get
Yeah,
as much like JP Morgan or Jamie Dimon said, net interest margin is going to collapse. They're going to have JP Morgan for the first time, Dan, is talking about competing for deposits. If you think back to Silicon Valley Bank, JP Morgan was laughing. It's like, dude, we could pay zero and we're the biggest bank. We get all the money.
yeah,
Jamie Dimon's like, guys, I have to pay more for deposits.
right.
So
Yes,
yeah, things are changing.
there's still a lot of money in money markets right now, though.
Oh yeah. Yes. Yep.
I saw a quote. This was at the Money Show. I was at on Friday. One of the presenters showed the amount of money in money markets right now is equal to the amount of money in bonds.
Oh wow.
That's huge.
Yeah. Bonds are bigger than
That
the stock market. Yeah.
Yes, yeah, bonds are bigger than the stock market.
Wow. Okay.
So there's a
That's
lot of money sitting on the sidelines.
mm,
If the market does sell off and pulls back into the end of the year, I think
right.
after the election, it's going to take off again.
There we go. There we
I
go.
talked about that on the last session about sideways movement.
Hmm.
So I want to finish this today by looking at. So we talked about financials
Hmm.
and what they're doing. I'd like to take a look at real quick some of the Magnificent Seven
Sure.
out of curiosity.
Why not?
Google actually had a pretty good day. Google just keeps on chugging higher,
Yep.
even in the face of the market sell-off.
Hmm.
They look pretty good. Amazon continuing higher.
Look at that.
Apple, there's Apple. Apple had a good day
Hmm.
right there. Apple
Oh
looks
wow.
like
A couple of good
make,
days.
making it, yeah, 2 days in a row, making a comeback. Meta, so, just kind of going sideways. Microsoft, going sideways. NVIDIA, this is the big one.
Yeah. Chop.
NVIDIA is in this channel that I've talked about before. And I said it, I think NVIDIA is going to continue in this channel sideways. And then we'll see what happens as it goes into earnings, if it
Yep.
breaks out of that channel.
Okay.
We'll see. Might not. And then Tesla, had a decent, I think I had a decent day. Actually, no, it was down a little bit, but didn't move much.
Hmm.
So Tesla hasn't moved too much. So in general, I mean, you can see here, this is again the short term, midterm, and long term. I update this every day after the market closes.
Hmm.
And Apple now changed from bear to bull in the short term. Oracle changed from bull to bear in the short term.
Interesting.
So if this continues, because this normally goes short, mid, long, then Apple might just be beginning its run.
Okay.
And for those that like to play options, this is kind of one way you can do it. You can watch these things. And now the early warning system that can go back and forth in one day.
Hmm.
That's just whether it's up or down for the day.
Right.
But the short term is a little more reliable. So when you get a bull signal in the short term, that's the time you might want to start taking a long position. One of the interesting things that John Carter said, because he's a big options trader,
Hmm.
he said when the market is in a bullish stance, the market's going higher, I like to play options on stocks like this, stocks that move a lot
Hmm.
in the technology sector. But when the market starts to roll over and starts to move into a bearish or a correction phase, because
Hmm.
I do not do puts on
Hmm.
individuals.
Interesting.
Instead, I play the indexes.
Hmm.
I do puts on the overall index instead, which I thought was pretty interesting.
Yeah.
Because, I've talked about before that we are in a long-term bull market. We're in a
Mm.
secular bull market. So
Hmm.
even if we do get a pullback, which we probably will, then for the long term, the market is still bullish.
Right.
So it's very risky to try to do puts unless you're, very agile.
Wow, I
I
got
thought
it.
it was
Okay.
interesting what he does, and he plays the indexes instead on the downside.
Mm.
The last thing here is a recession watch. You talked about recession. These are the three things that I watch, and we'll just see how they're doing. I think the recession is going to be more towards the end of the year, beginning of next year.
Okay.
I do think we'll have one, but it will be short and shallow. So
Got it.
first is unemployment. We talked about this last week. Unemployment needs to spike right now. It needs to get to 4.2.
Hmm. Yep.
Not there yet. Second one is the Fed cuts. When the
Hmm.
Fed starts to cut, usually about 3 to 5 months later, the recession starts.
Hmm.
Fed has not yet started cutting. And the last one is the yield curve. Whenever the yield curve goes back above zero,
Right.
like it did in these two times, 6 months later was a recession. This time, 5 months later was the recession. That has not happened yet either.
Yep.
So all three of
Okay.
my recession watch charts still are saying we're not ready. We're still more than 6 months away for a
Yeah.
recession. So I
Very
think
cool.
probably next year sometime.
Okay. Well, Mr. Dan Bird, we will be talking almost every Sunday, doing 2 videos a day. I appreciate you. One more time, breakpointtrading.net. Get the newsletter. You can get it for free. You can click on it. Or better yet, sign up for 99 bucks. I can't believe he does it. 99 bucks for the entire year. All the charts, all the information he keeps adding. And you get 90 minutes of Q&A with him I just saw.
once
So
once a month. Yep.
there you go. All right, Dan, you're amazing. Take care.
All right. Have a good weekend.
You too.